guys, this is Badri and today we are going to see the actual reasons behind implementing the GST. So let's get started. So GST, what is GST? GST means Goods and Service Tax. It was first proposed by our ex-Prime Minister Atal Bihari Vajpayee in the year 2000 and a committee was formed and Asim Das Gupta, who was the finance minister of West Bengal at that time, was made an head of the committee, and back-end support like IT, that is information technology, was asked to be prepared. Not only information technology but also the logistics for implementing the GST. So the main reason behind implementing this GST was to remove the cascading effect. So what is cascading effect and how it was affecting our tax system, we will be knowing it in the next part of the video. When goods and service tax is implemented in India, there will be three kinds of applicable GSTs that we will be seeing. They are CGST, SGST and IGST. CGST means the tax collected by the government will be going to the central government, and SGST means when the revenue is collected, that is the tax is collected, the amount will be going to the state governments for intra-state sales. That is, if the product is manufactured in one state and also sold in the same state, the tax will be going to the same state. And next comes IGST. The revenue will be collected by the central government for interstate sales. It means if the product is manufactured in one state and sold in another state, then central government will be taking that revenue. And we have 5 different tax rates in it. One is no tax at all, then 5%, 12%, 18% and 28%. So this is a brief explanation about the earlier tax system and current GST. So it is divided into two types for our simplification. And if the sale happens, that is if the product is sold to the same state, so earlier we had VAT plus central excise or service tax, and now we will be having central GST plus state GST. What is the difference between these two means revenue will now be shared between the center and the state governments. The second thing is, if the sale happens to another state, that is if the product is sold to the another state, we will be seeing IGST. Earlier we had central sales tax plus excise or service tax. So the difference is there will be only one type of tax in the case of interstate sales. Here we have an example of the product that is going to manufacture and how it is going to reach to the end user. So the manufacturer purchases the raw materials, and during the purchase he has to pay the VAT, and then after the preparation of the product he will be selling it to the wholesaler, adding the VAT and excise duty. Then the wholesaler will be selling that product to the retailer using VAT again, and then the retailer will be selling it to the end user, adding the VAT tax. So here we have VAT again and again. So this is the reason why the GST has been implemented. So you will understand it in the next part of the video. Let us understand that example with this apparel industry. If the manufacturer has purchased the raw materials like wool or the silk and then has produced a product, a certain value has been added. That is, from the raw materials to the some sort of finished good, we will be having some sort of value to that product, and then from the manufacturer it goes to the wholesaler or the warehousing guy. So in the warehousing also labels or the logos are added to the product. So that is also a sort of value addition to the product. So then after the labels and logos is done, it will be going to the retailer. Packaging and etc. will be added to that product. From there it goes to the end user, and the end user will buy the product. So the end user will be paying all the value added taxes to the government, because the tax has been transferred from the manufacturer to the wholesaler, and from wholesaler to the retailer, and then retailer to the end user. So the value added tax will be paid by the customer or the end user. So in our apparel industry example, for the earlier tax system, this used to be the calculation for the price and the tax. So if the manufacturer has purchased the raw materials and he has produced the product at the cost of 100 rupees, and if the tax is around 10%, the total cost that he is going to be selling to the wholesaler was 110 rupees, because 100 plus 10, and the 10 rupees, it's a burden for the manufacturer and he transfers that liability to the wholesaler. Wholesaler will be adding his part of the profits and his part of value addition. Suppose that is 40 rupees, then the total cost of the product becomes 110 plus 40 and the product cost will become 150 rupees, and on 150 rupees 10% tax has been paid, that is 15 rupees. The cost of the product becomes 165. So that 165 is the product that is going to be sold to retailer, and at the retailer again the value addition has been done 30 rupees. So the product cost becomes 165 plus 30, that is 195, and on 195 again the 10% tax has been paid, so that is 19.5 rupees. So the total cost of the product now became approximately 215 rupees. So this is called cascading effect. It means tax has been paid again and again for the same product. Total VAT has been paid by customer. So this is the cascading effect. Paying tax on tax again and again is called cascading effect. But in the new GST's tax system, there is a way to claim credit for our tax paid. So when the manufacturer has produced his products and sold it at 110 with a tax of 10%, that is 100 plus 10 equals to 110, the wholesaler will be purchasing it at 110 rupees only. And then from here the tax is calculated on the value added by the wholesaler. That is, let us assume 40 rupees. So on 40 rupees 10% tax is calculated in GST. So 4 rupees will be the actual liability that the wholesaler has to pay, and then the cost of the product becomes 110 plus 40 plus 4, that is 154. Then the retailer will be adding his value addition at, let us assume, 30 rupees, and then the value added 30 rupees will be taken as the base for the calculating the tax of 10%. So 3 rupees will be the actual liability, and the product cost become 154 plus 30 plus 3, 187 rupees. So 187 will be the price that the customer will be paying and purchasing the product. So here you can see the cascading effect has been removed, and then the product price has been reduced from approximately 215 rupees to 187 rupees. So this is the reason why GST has been implemented. So what are the benefits to the country? It will help the country's business gain a level playing field, and then it will put us on par with the foreign nations who have a more structured tax system, like France, European nations, etc. So it will also translate into gains for the end consumer who have not to pay the cascading taxes anymore. So there will be now one tax system on goods and services, and many more benefits will be there for the country in the long run. I don't say that all the prices of the goods will reduce. Some will reduce and some will increase depending on the type of the product. Let's see what are the things that will become cheaper and costlier. So here are the details of the goods that will become cheaper and that will become costlier. So you can just pause this video and you can have a look on it. So there are some goods that have been taken out from the tax boundaries of the GST. I will be giving that data in the description below. So let's hope for the country's development, and I hope you like this video. Please like, share and subscribe to my channel for more updates. Thank you. I am proud to be an Indian. Jai Hind.